Last week we started talking about the monetary system a little bit, hopefully getting towards a solution to the global financial challenges that we have, this never-ending cycle over and over and over again, the treadmill as we called it, of constantly being in financial situations that get worse and worse and worse over time. What is the solution? We're working towards that. So this week on the Setty Report, we're going to continue that. Madhava, what do you have for us here this week?
We're talking about complicated things here, folks. So the first thing I want to say is these subjects need hours and hours of explanation. We're just trying to hit the big points, the 30,000-foot view, if you will. And my goal here is to instill curiosity in all of you to look more deeply. And yes, as a brief recap, we identified what Joe says is the treadmill, which is a constant and open decision by our central banks to slowly increase the monetary supply, i.e. inflation at a rate of 2%. They say that is the sign of a productive society, and it's also being sold to us as a sign that we're becoming more and more prosperous. Yet we know, and hopefully we realize, that we're not doing that much better, especially recently. And why is that? So that's what we're breaking down. These are complicated topics, but this time for sure there'll be some nuggets at the end, almost quite literally. So the problem that we've identified is that those who are in control of debt and the monetary system are able to create money out of thin air. Whenever someone wants debt, they can provide it. It doesn't exist anywhere until someone signs a promissory note. The monetary expansion basically causes inflation to rise. Inflation rising is a motivating factor for us to take loans. When we take a loan, we increase the monetary supply. This is the treadmill.
Absolutely, and in this discussion has come up a number of times, and some people suggest things like, well, if we're not going to create money out of nowhere, maybe we have to go back to a commodity like gold, for example. What are your thoughts on going back to sort of like a gold standard, as some have suggested?
Yeah, well, the gold standard has worked before, as we know, and that is a extremely reasonable solution that worked in the past. Why can't we do it now? But before we answer that question, let's just take a look at the price of gold. Here we are looking at the price of gold going back to, I don't know, this looks like about maybe the turn of the 20th century, around 1900. The first thing I want to point out to you is this. Look at how flat the line was prior to 1971. It was basically the same price. Was gold not getting more expensive? What was happening there? Why didn't the price of gold increase? Well, this is the result of the fact that in this country we had a gold standard. A gold standard means we fix the price of the dollar to the gold, or we fix the price of gold to the dollar. So when our government says, look, we're going to have a gold standard, and if you turn in $38.50 of the cash that you own, we will give you an ounce of gold, right? This pins the price of gold to that sum. This also means that the gold cannot appreciate in value if it is pinned to a currency that is constantly being devalued. So it remains at $38. That's what it was right up to 1971. And for those of you who know history, with President Nixon and his edict to end forever the convertibility between gold and the U.S. dollar, in 1971, I believe it was August of 1971, as soon as that date arrived, now gold was able to move with demand. Gold immediately started to rise, and there was a dip around 2000, and it's continued to rise and rise and rise. And Right now, it's hovering at around $1,700 per an ounce of gold. Right away, we have a problem, right? What is really the value of gold? Because we're comparing it to the dollar, which is being devalued every time we print money, as we like to call it. But whenever we expand the monetary supply, things get more expensive. So what is really happening to the price or to the value of gold? Do you see what I'm saying here? Now, using a dollar to measure value is complicated and perhaps even irrelevant, because the value of the dollar is changing every time we print money. So we are faced with a very interesting question, like how do you measure value if the measuring stick you're using is always changing in length? So what I'd like to do now is take a look at a comparison between the price of gold and the value of the equities market. In this situation, it is the Dow Jones Industrial Average. So let's take a look at that. Now, the gold price is given in the gold line, and the blue line is the Dow Jones Industrial Average. Now, it's not given as a price, it is given as a relative increase from a certain time. Now, this is what I want to bring up. This is a very subtle point here. When people discuss what is the value of investing in precious metals like gold compared to the equities market, what I mean is the stock market, people always say, well, gold is fine. It's a good hedge against inflation, but really you need to be all in on the market because over time, the market has done way, way, way better. The problem with that argument is this. Most comparisons that people make start off back in the 1920s or before that. That is not a fair comparison because the price of gold was pinned to the dollar. It was not allowed to appreciate, right? So a more fair comparison is to look at the price of gold or the value of gold from 1971, where gold was allowed to appreciate based on the demand for the metal. And you can see right here that the price of gold, or the relative increase in its value, is more than the Dow Jones Industrial Average. So this goes back to 1971. I hope we can all see that. Now, before I make the statement that, look, gold is better than the stock market, what this is missing here in this graph is the dividends that are paid on the equities that you own. Do you follow me? Mm-hmm. This is just the value of the stock prices in this particular collection of stocks, the Dow Jones Industrial Average. If you include the dividends that these companies pay to their equity holders, it turns out that the blue line would be slightly higher than the gold line. Nonetheless, it begs us to ask the question, why aren't we told more about how good a investment gold is? So now I'm going to go into speculation. Maybe there is a intent to keep this from the general public's knowledge. I don't know. But one thing for sure is if we were to all appreciate the fact that gold is a really robust investment vehicle, we would keep more money in gold. And this sounds perhaps a little bit conspiratorial, but if many people in our society would hold on to gold, one thing for certain, or perhaps two things for certain, is if we put our money into gold, we're not going to put all of our money, or some of our money will not go into purchasing things. We'll be purchasing gold. When we don't purchase things, that's less pressure on inflation. We're not putting our money into circulation. Secondly, if we all had some gold, it would be much easier for us to institute or reinstitute a gold standard. Everybody is, used to having gold. And when we make large changes like this with how we exchange value, a lot of it is psychological. We didn't go directly from the Federal Reserve to having fiat currency. I hope we all understand what fiat currency is. Fiat currency means it is currency that is not backed by gold or silver or any other commodity. It is called fiat currency because fiat is means by edict or let it be in Latin. We are told that we must use these pieces of paper that are not backed, and we have complied. It's not easy for a population to give up their gold or whatever they considered valuable that was real to now use paper currency. It took generations. And that's why we're in our state right now, is that we have grown to accept it and value it and trust it. So going back to the gold standard requires us to be comfortable with owning gold. So I'm suggesting here that there is an unsaid de-emphasis on gold. It's not, overbearing, but it's there because look at the numbers yourself. Look at the graph. That's a pretty reasonable investment, in my opinion.
So based on what you said there, I mean, it almost sounds like the idea of a gold standard actually made it easier, at least at that time, to sort of control the way fiat could just run all over the place. Why not go back to that at the end of the day? What's actually stopping that from happening?
Well, let me be very, very clear here. Going back to a gold standard would be an improvement because it cuts off the ability to expand our monetary supply indefinitely and without any repercussions. In other words, if a bank or a central bank can create wealth from nothing, there's no stopping it. However, if it has to invest the time and effort to mine gold from the Earth's crust, there are limitations as to how far they can expand the monetary supply and how willing they would be to do that. So gold or another type of commodity-backed currency would be an enormous improvement for sure. But I would say that the problem here is that we don't know how much gold there is on our planet. So it may in fact be limitless. We don't really know. But because it takes effort and money and labor to extract it from the crust, then we have limitations as to how far we can take it. But the bigger problem, and let's be very practical, Joe, is that the powers that be are not going to let this happen. Let's be practical.
Yeah.
First of all, many of our elected officials don't even understand what this is, what the monetary system is. This is not even a conspiracy because it's not covert. It's right there out in the open, but people still do not understand this treadmill that we're on and how fiat currency is depleting our resources. So those that are really in charge will not let this happen. They're not going to go back to a gold standard. I wish they would, but they won't. So we have to come up with a different solution ourselves. And that's where I'd like to leave it right now.
Yeah. And we'll be talking more about cryptocurrency and stuff like that because that is a self solution that's coming from the people, which is an important thing because what you're alluding to here is people having to get engaged, right? We have to sort of take a lot of the solutions that we're faced with and start talking about it. One last thing I want to bring up here a little bit before we cap this off is the question of do we almost have to accept at this point in time, given what we're talking about, given the fact that we need solutions, that leadership, if you will, and I mean we're all at different points in how much we've looked into this or how much we might research this or what our worldview is on this, but is it almost imperative that we accept that what's happening at a leadership level in the world right now, whether it's based on the way countries collaborate or based on the way governments run, that the best interest of the people is not necessarily being considered?
Well, that's what I feel. We all have to come up with our own decisions and opinions about that. I don't think the people have ever been really on the table in terms of their interest in their best, what's good for them. And I see that happening right in front of my eyes. And I think it's time that we all at least I feel a certain responsibility for speaking out, and that's why I really enjoy talking to you. I feel like that these are questions that are that should be posed. So I appreciate you asking it, and that should be answered directly without beating around the bush and say, well, I don't know, and maybe no. It's a system designed to fleece the population of the planet. It is unquestionable, and it's right there out in the open for anyone to look at and see. And I'd like to answer some of those questions in the next episode because they're worthwhile to consider, honestly.
All right, well said. And we will be getting into, for those watching, we'll be getting into cryptocurrency and more solution talk in the next episode. But why did that last question come up? Because at the end of the day, if we aren't aware of what is going on, and if we're not asking these questions, but we're just doing the same thing over and over again, we can't expect things to evolve. So that's it. That's all. Thank you, Madhava, once again for an excellent Setty report. And we'll catch you.
Thank you, Joe. Stay sharp, everybody.
That's all.